Our company is Cloudast, and we will be going over the executive summary, financial and market performance, assessment of our current situation and market, strategies for the next year, financial request, pro forma, and tactical plan. Our mission is to provide our customers with microcomputers to meet their needs that are of the highest quality and best customer service. Throughout the previous quarters, we have been increasing our market share in each segment and overall market. This is due to our low prices and segmentation of products within each market segment. We are expecting to continue on this trend by having rapid expansion in untouched markets, and this will require additional funds to do so. From quarters 2 to 3, we have been the #1 owner of the overall market share and in the top 3 of each different segment. We have been financially doing well, with revenues increasing each quarter and no emergency loans being taken out, and we expect this trend to continue. We have a specific focus on the Mercedes and Workhorse customer pools, but we are catering to all 3 segments and have a leading demand in both regional and worldwide locations. Our operating capacity has also been steadily increasing to accommodate our increasing demand and market share. We are the top holder in the Workhorse market, second highest in the Traveler market, and third highest in the Mercedes market, with Get It being our biggest competitor in terms of overall market and segmented market share. On this slide, you can see the breakdown per segment market for quarters 2 and 3, and we are increasing our market share in both of our top 2 segments. Cloudast's strengths would be our lower production and product costs, higher worker productivity, and our adaptability. We are constantly trying to improve ourselves and cater to each market's needs. One of our biggest weaknesses would be that we are not producing enough to meet demand. There is a market for our products, and we have not been able to fully produce enough. With this weakness, we are presented with the opportunity to expand our sales offices, products, and fixed capacity to be able to meet our high customer demand and increase our market share.
Now we would like to speak with you about Cloudast's 5 strategic plans. We have marketing strategy, sales channel strategy, human resource strategy, manufacturing strategy, and financial strategy. For our marketing strategy, we have a couple of ads for our high-end computers. We do not currently have item-specific commercials due to budget. However, the generic advertisement and the quality of our products are what keeps the majority share. With extra funding, we will be able to reach out to potential consumers and advertise that there is a computer for each one of them. We produce the most brands in the industry for each individual sector person. And we pride ourselves for the quality, variety, and support we can continuously provide. Sales channel strategy. Each of our competitors are currently operating in the market in both Shanghai and Chicago. Our goal is to reach the untouched market segment in Paris and Pueblo before our competitors. With rapid expansion, we believe we can reach these markets first. Direct selling efforts have proven to be successful, but we hope to reach a broader market with indirect selling through retailers. Indirect selling has many advantages that will help us reach our goal. Advantages include stronger customer relations, a personal buying experience, and all Cloudast products will be readily available to them. Human resources strategy. In human resources, we like to identify the current and future needs for Cloudast to meet their goals. Cloudast integrates human resources planning with business planning. Cloudast assesses the current human resource capacity based on their capabilities against the capacity needed to achieve their goals. We hire additional staff when needed, offer career development, additional training, and promote from within. Recruitment of highly skilled employees is a priority. Cloudast has a compensation package that includes an annual salary, health benefits, vacation time, and a contribution to the employee's pension fund. Cloudast offers the best compensation package out of all their competitors, satisfying the employee's need and motivating them to excel. Manufacturing strategy. The manufacturing goal has been to achieve economies of scale by having high demand and production, which in turn lowers overhead and overall production costs. Being able to produce at a lower cost allows Cloudast to sell products with a low-cost strategy. For the first 3 quarters, Cloudast has been operating at a fast expansion and growth phase and has been predicting a high demand and having a coinciding operating capacity to meet the expected demands and to create lean manufacturing. After quarter 4, Cloudast will have a sales channel in all locations and will implement a lean manufacturing strategy and increase the market share to 68%. Fixed capacity will increase for quarter 5 to meet the demand of the new sales locations and will need to continue to increase in order to continue to meet demand and become the leading company in all market segments.
The financial strategy has been one of intentional conservatism in the startup phase. As demonstrated in our pro forma, which you will see next, we've intentionally undershot our expected demand to keep costs within reasonable bounds. Through accurate predictions, we've met or exceeded our financial goals period over period consistently. Going forward, with the value of economies of scale unlocked, our strategy is to expand aggressively, requiring significant capital investment to rapidly and effectively grow worldwide, maintain, and increase market share. What we offer you is an opportunity. As demonstrated by our strategic goals and imperatives, our strong market and financial positions, we expect to easily see a return on any potential investment to be 300% or greater, with quarter 6 earnings at the end of the fiscal year being upwards of $85 per share. A capital investment of at least $4 million will support our rapid expansion plans. Furthermore, while I would be very happy to partner with you at any level, the more capital that is contributed, the less additional funding would be needed in the way of conventional commercial loans that have a current APY of approximately 12.8% if we need to fund $2 million or more. Furthermore, funding more than $4 million, if that is an option for you, will give you one thing more: a controlling share in the company. As you can see on our pro forma, from startup through Q6, projecting out our anticipated growth based on past data and strategies already presented, as well as our strategic and tactical imperatives, we expect to see very healthy returns on capital invested. By quarter end period 6, we expect over $6.98 million in net income from operations and over $10.37 million in cash by the end of Q6, supporting the earnings per share we reviewed previously of $85 per share. This tactical plan outlines some of the major tactical decisions and elements that play pivotal roles in our strategy upcoming over the next 4 quarters. Items of specific note are the heavy increases to research and development, investing $8 million over the succeeding 3 quarters. We expect to see Salesforce expand to $1.36 million quarterly expense, and we expect demand to be upwards of 13,700 units. In line with these changes, we will also see fixed capacity increases of $4.1 million over the next fiscal year. Thank you all for your time. We hope you found this opportunity to be intriguing, and we are very excited to be partnering with you soon as our rapid expansion begins.